In this video, I will test this 3 EMA scalping strategy shared by Trader DNA to find out its real win rate so that we know exactly whether we should use it or not. The creator also mentioned that this is one of the absolute best methods for trading, so let's actually see what it's all about. For the backtesting, I will set my initial account size at $1,000 with a 1 to 3 risk to reward ratio. Make sure you watch this video all the way through to the end, as in the back end of the video, I will be improving this scalping strategy to make it a little more profitable. Like, subscribe, and turn on those notifications so you don't miss out. Now without further ado, let's get into it. So apparently this strategy works on any market with a high level of volume, like crypto, Forex, stocks, and even gold. But for today's video, we will be backtesting it on Ethereum versus USDT on the 1 hour time frame. Okay, now let's begin to build our setup step by step. First, we need to come up here to our indicators tab and search for the exponential moving average. And let's actually add 3 of these. Now let's double click on one of them and change the length from 9 to 13. We'll then come across to our style section and we will change its color to green. The next step will be to access the settings on our second EMA, so we'll double click on this and we're actually going to be changing its length to 8, and then let's make our line a little thicker. Finally, let's double click on our third EMA here, and in the input section we're going to be changing its length from 9 to 5, and then let's also change its color here from purple to red. And finally, let's add another indicator to our chart, and we're going to be searching for parabolic SAR. Alright, now that the setup is complete, let's understand our trading rules. So a buy signal is confirmed only when the following conditions are met. First, the red EMA must cross above the blue and green EMAs. Second, the blue EMA must cross above our green EMA. And then third, the parabolic SAR needs to be positioned below our price action. A buy position will be opened on the close of our trigger candlestick. Our stop loss will be set slightly below our most recent swing low. And for this strategy, we're going to be targeting 3 times the risk. Here is another example for a long position. We see that the moving averages just aligned in a way so that on the top we have our 5 EMA, which is the red line. The blue line, which is the 8 EMA, is positioned in the middle, and on the bottom we have our 13 EMA. Then looking down towards our parabolic SAR, and it also confirms our entry. So we'd be placing a buy order on the close of this trigger candlestick, bringing our stop loss there down towards our most recent swing low, and once again targeting 3 times the risk. The rules for entering a sell position are exactly opposite. First, the 5 EMA, which is our red line, has to cross below the 8 and the 13 EMAs. Second, the 8 EMA, which is our blue line, has to cross below our 13 EMA. And finally, the parabolic SAR dots must be positioned above our price action. So we'd be placing a sell order on the close of our trigger candlestick. The stop loss will be set just above our most recent swing high. And once again, we are going to be targeting 3 times the risk. As we can see, this strategy is very easy. Pretty much anyone who has a basic experience in trading can use it. However, I do believe that sometimes easy isn't always good. If we take a closer look at the strategy, we can see that the parabolic SAR doesn't really do anything to eliminate our false signals. Notice when the EMA gave us a long signal, the parabolic SAR also confirmed it. And if we would have entered this trade, it would have turned out to be a loser. If you know how to combine indicators in the right way, you already know that you can't combine 2 indicators that do the same thing. This is really bad because these indicators usually do not cancel each other. Notice here that these EMAs give us a signal to go short and the parabolic SAR confirms it. But if we do actually zoom out, we see that all the price action is doing is currently ranging. And normally a good strategy wouldn't give you a buy or sell signal during this time. So in my opinion, this strategy is not complete yet, and I will definitely try to improve it in the second part of this video. Now let's actually get into our backtesting to find out the real metrics behind this strategy. So after 100 trades, the results aren't really looking that promising. The win rate is only 31%, which is really low even for such a risk to reward ratio. The account growth only grew by about 42%, which is pretty much nothing if you're trading on the 1 hour chart. The equity curve is very inconsistent. The max drawdown was 16.82%, although our max profit trade was actually around 40%, which is fairly good. The profit factor for this strategy was 1.23, and we had 3 consecutive wins against 8 consecutive losses. This is pretty bad. I did expect these results to be a bit better overall, but this strategy is quite risky and unreliable, and you'd definitely be giving up on it very soon after experiencing all these losses. So the question is, can we make this strategy better? And the answer is yes. So our first step will be getting rid of this parabolic SAR indicator, and we'll be adding a different indicator called the stochastic RSI. The next step will be to change the lengths of these moving averages. So first, let's replace the 13 EMA with a 100 EMA. We'll be changing our 8 EMA to a 50 EMA, and then we will be changing our 5 EMA to our 20 EMA. Now that we have the setup ready, let's learn our trading rules. This is a very smart entry technique and is for advanced traders only. So for a buy setup, you want to have the following conditions met. First, the moving averages must be aligned in a way that on top goes our 20, then it goes 50, and on the bottom we have our 100. Second, the price action must pull back into our 50 EMA, and before this pullback, it obviously needs to be positioned above all of our EMAs. Third, a bullish engulfing candlestick must be formed after a bearish candlestick that is touching our 50 EMA. Fourth, the stochastic RSI must get oversold during this pullback. Once we have these conditions met, we're going to enter a long position as soon as the stochastic breaks above our 20 level and a bullish candlestick is formed at the same time. Our long will be opened on the close of our trigger candlestick. The stop loss will be set at our most recent swing low, and this time we're going to be targeting 1.5 times the risk. By the way, if the price action exceeds the 100 EMA, the signal automatically becomes invalid. For short positions, the rules are exactly opposite. First, the EMAs must be aligned in a way so that on the bottom we have our 20, in the middle we have our 50, and on top we have our 100. If they are positioned in this way, the downtrend is officially confirmed. The second condition will be to have our pullback where the price action touches our 50 EMA. Then the stochastic must also get overbought, and then an engulfing bearish candlestick must be formed right after the most recent bullish candlestick that is touching the 50 EMA. Then for our sell entry to be confirmed, we're going to be waiting for the stochastic to break below our 80 level and the market to form a bearish candlestick at the same time. So we'd be opening our short position on the close of our trigger candlestick. We can bring our stop loss there just up above our most recent swing high. And once again, we are targeting 1.5 times the risk. This strategy may seem a little complex, but once you have mastered it, it's going to be very easy for you to spot the perfect trade entries. Okay, now we will move on to the backtesting to find out the real numbers behind this strategy. I couldn't fit the recording of the backtesting in this video as it does need to go live, but just trust me on this. These results are much better than the first strategy. We managed to increase our win rate to 75%. We gained over 437% of profit on our account. The profit factor is 4.37 and we had 14 consecutive wins against only 4 consecutive losses. Also, our max drawdown was now only 7.76%, which makes this strategy perfect for scalping. I would highly suggest you go ahead and backtest it on different markets as well as different time frames, and then you can also forward test it with some paper money. Okay traders, I hope you enjoyed this video. If you have any questions, please ask them down in the comment section below. If you enjoyed, please leave a like, comment, subscribe, and turn on those notifications so you don't miss out. I love you all. Peace.